Hello and welcome back to another episode of Wade into Wealth. Big news in the cryptocurrency world. As of this recording, it's Monday, June 13th. Bitcoin is down 15%. Well, it was 15% the last time I looked. News that Celsius, one of the largest lenders in the cryptocurrency industry, has frozen customer withdrawals. You can't take money out right now.
Well, that may not be the only reason why it's down, but certainly a contributor to it going down.
That's a big
Absolutely,
reason.
yeah.
That's
yeah,
the primary
I think you probably want access
culprit.
to your money when you'd like to have it.
Yeah.
Taking that away, not good.
So we're going to talk about that today, and there's some good lessons in this conversation for just life in general, but especially when it comes to your finances.
Yeah.
Let's start with what is Celsius, because what I find it continues to happen is there's so many different cryptocurrencies out there and different markets and exchanges in which cryptocurrency like Bitcoin and Ethereum and Dogecoin and all these things trade on. Sometimes it's hard to tell what's what.
I didn't know what Celsius was before the day started, so
Neither did I.
We're in the same camp there. But they're think of it like a bank.
Yep.
For your cryptocurrency, where you can deposit your cryptocurrency assets, and they will very kindly offer you very high interest rates.
Up to 17% when I looked this morning. Paid weekly.
Yeah.
Not 17% a week, but 17% annually. But they say they'll pay you interest every week.
Cryptocurrency just
That's
keeps
a good deal.
It's a great deal until it doesn't work anymore.
Yeah.
And so they were taking in the cryptocurrency assets. You deposit it, you get nice interest. That is as long as they can continue to pay it.
And that's the caveat. Let's just state that. That is the big caveat there. As long as they can continue to pay it. It's never that simple as put money in and we'll give you up to 17%.
No, I mean, that's like synonymous with the interest rates that credit cards charge their customers.
Charge their customers.
Correct. Not give, but charge. And so everything is okay until it's not. And oftentimes in this industry and in life in general, when things sound too good to be true, they are. And this case in point, your bank savings account, maybe if you're lucky, giving you 0.5%.
I saw a
maybe
6-month introductory CD. I saw a billboard for it.
Yep.
6-month introductory CD, 1.9%.
Look at that.
6-month rate. And I thought, okay, I mean, it's better than it's been.
Well, sure, yeah.
But if you look at where interest rates are, and that's the thing you have to remember, with any bank or with an institution such as Celsius, if they're lending you money, if they're paying you interest for a deposit, you'd better believe they are then lending your deposit out and charging more.
Yeah, so they're a for-profit business.
Not UNICEF.
They make money off of charging their customers more than what they are paying out the folks who have deposits in the balances with them.
And I would have to assume there is also, with companies like this, that they are expecting they could invest some of this money and earn a higher rate of return with it. And if you look at Bitcoin prices, especially during the pandemic, they did very, very well. And these companies are probably making a projection that we can invest a percentage of this and earn a better rate of return.
Yeah, and for a while, they were accomplishing that and probably and then some. However, now is a different story. Yeah. Because cryptocurrency, you're not making the money that you were. That market is not booming. And as such, when that tide turns, the company who's giving promises of things that sound too good to be true, well, their best response to stay in business is to pause and freeze your customers from taking withdrawals.
This is not unlike what happened during the banking crisis in the late 1920s when the Great Depression started.
It's not unlike
this is
that.
how you try to prevent a run on your bank or run on people making withdrawals. You say, well, you can't.
I think
can't do it.
The most recent example was probably in Robinhood.
Yes.
With the GameStop trading issue where they had to limit trading and even stop investors from buying more shares of GameStop or even, I don't know about the sell side of it. They may have stopped that. It's 2 years ago now at this point. I don't remember. But that was because Robinhood had a real question of if they had enough assets to be able to stay in business through that mini crisis. And you can bet that Celsius shares that same concern because you don't pause your customer withdrawals if your business is fine.
No.
You pause it because if this continues, we're out of business and we're not able to continue to give people their assets back.
Right. And so that's a massive red flag.
Huge. It's a huge red flag. That's a last resort for a company in a business like this.
Yes. Well, and
reputational damage that is done. Now for Robinhood, they're still in business. They're still okay.
Well, and more greater than the reputational damage is the potential that the company's going out of business.
Reputation only matters when you're still in business. You're right. Yes.
As long as you're a going concern, your reputation matters.
Yes.
But they are in danger of going out of business, but then having all of these creditors, people that have loaned them money or made deposits that I'm assuming they're not able to cover. And so that is
you're not doing this
problem.
if you have coverage for all of your people's assets. Otherwise, they'd be able to take it out.
Yeah. So what's happened? Because we're in an environment now where we haven't been in a long time, where interest rates have risen. And during the pandemic, cryptocurrencies just went through the roof. And so much of what fueled that growth is that they have been seen as for a long time as a hedge against inflation and against interest rates being very low.
Funny, because we have inflation, which is basically roaring right now.
I mean, higher than it's been in 40 years.
And Bitcoin's down almost 70% since its high?
Yeah, when you have interest rates, Bitcoin was incepted in early 2009.
Yep.
So this is right during the period of time where the financial markets had crashed in the Great Recession and interest rates were coming down. And so for almost all of its existence, I went and looked, for almost all of its existence, interest rates
were coming down
or remaining low.
Yeah.
They are we have witnessed the highest jump in interest rates within the last 3 months since Bitcoin has been invented.
Yeah.
And so what has happened, Bitcoin from its high is down 66%. In November of 2021, one Bitcoin was valued at $69,000. Today, below $23,000. At least it was. I don't know where it is as of right now.
But for an investment that should be a good hedge against inflation, with inflation being as high as it is, one would think that it would hold up much better than that. But it also comes down to when investors start to get nervous and you have a very risky asset, which is exactly what cryptocurrencies are. I mean, there's nothing that backs it. There's no physical, tangible item that's behind it.
There's no creation of wealth.
And we don't even know who created it. Now, this isn't to say that cryptocurrency is bad. No. It's just, if you're going to get into an investment, you need to understand how risky one is. And sometimes when markets just keep going up, 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 and up, we often think, well, the market will just keep going up. And so I don't have to worry too much about the fact that this is a risky investment because it's been making a lot of money and it's going to certainly change the world until it doesn't. And then you realize, wait a minute, maybe that's not exactly what I had thought that it was.
And the problem that I have with this is that people get hurt that don't necessarily understand what they're doing. There is the fear that they are missing out on something, that they are seeing this go through the roof. You are seeing people post about it on Facebook and Instagram and Twitter and social media. You see all of these things and you think, oh, I should be doing this too. Nobody's having that thought right now. Very few people are having that thought. Should I be investing in Bitcoin now? Very few people are. Now, when Bitcoin was at $69,000 and was up over 100%, couple 100% in a year.
Yeah.
Now people are starting to have that thought. So let's say you invested money in Bitcoin because you heard someone talking about it on social media, or you saw Tom Brady or Matt Damon or somebody promoting it during the Super Bowl. Well, Super Bowl was in February. Bitcoin wasn't at its high, but it was a lot higher than it is now. So you invested when Bitcoin was $55,000 or $50,000. How are you feeling now?
Probably not great.
Not great.
Yep.
Right. And so that's a real problem. And these are supposed to be assets that are hedges, even against the stock market. Well, and look, if you're invested in the stock market, you're not loving it right now.
No,
The
the stock
S&P
market's
500's
down
down.
20% from its high.
It's high at the end of 21.
Bitcoin's down almost 70.
I mean, which do you feel better with?
Well, I don't know. I think 70 is probably a lot worse than 20.
Right. So, and this is also where the fact that some people love that Bitcoin and cryptocurrencies aren't really regulated.
Yep.
There are also safeguards when you have regulated financial markets. There are safeguards that are put into place for this. Companies need to hold certain amounts of cash to be able to meet withdrawals.
Yeah.
You can't just play it willy-nilly.
Now, the reality is if you bought it for $55,000 and today it's worth $23,000, if you only did a moderate amount of your overall portfolio, it stinks, but it's not the difference between your retirement and not, or your financial stability and not being stable with it. You're feeling a little short in the
Well,
in the
I
seat.
just realized my chair was significantly lower than yours, so I raised it.
I did it
And
on
now we're-
purpose.
oh.
Did it on purpose.
Did you?
No.
Oh,
No,
okay.
but it is a good idea. I will come in here ahead of the show. For those of you listening and not watching us, Chuck just had to take a break to raise his seat so that we were on an equal height playing field.
Yeah.
But I think, going forward, I might sneak in here and lower that seat
good
just
idea,
to
yeah.
make you appeal a little shorter than me. But if you did it in moderation, it's not the end of the world. If you went and put a significant amount of your assets in it because of the fear of missing out, that's where it becomes a whole other ball game for the issues that you have currently. And now, trying to dig out of that hole as we go forward.
Yeah, it doesn't really work. I saw something this morning before we even had this conversation about doing a podcast about this. There was a friend on social media who the post was, "Are you buying, selling, or holding Bitcoin? Asking for a friend, ... Now, I have become a lurker on social media. I don't have a lot to say.
I'll tell you what, though, that's where I would get my investment advice. Twitter.
And there was a moment where I was going to just write, this is a bad idea. And I thought, no, this is not the place for this.
That's right.
But I did go back to look at the comments because this is the absolute worst place you can be getting investment advice from, or advice on just about anything, is on social media. The first thing I saw was a gif of Mel Gibson from Braveheart when he's yelling, "Hold." Then I saw someone saying, "Oh, pushing more in. I'm all in." Look, and this is the thing that I just get frustrated with, is that the person who said hold obviously owns it and doesn't know what to do with it.
Mm-hmm.
Someone is saying, well, I bought more. Well, how much more did you buy? Did you buy $100 worth? How much more is more? There's no context to that. And people see this, and I hope nobody's taking the actual advice or taking action based on this.
I wouldn't count on that. Do you think that when the person has a sore throat or a larger issue that maybe they take a picture of it and post it to Twitter and ask the Twitter audience for what type of healing remedy they should take? Or do they call their doctor?
Well, I'll tell you, that's where I got get my vaccine advice, is on social media.
Says
Say,
the
what
person
is
who's been
everyone?
most vaxxed in U.S. history.
It's a different story.
Against COVID.
It's a different, yeah. Well, you know what? I was in a trial, and then there wasn't a booster available for the trial. So
Look at you.
I have gotten 4 COVID vaccines. So yeah, I'm good with that. But yes, I got all my advice on social media about what to do.
Yeah.
That's sarcasm. I didn't.
Yeah, I figured. I know that.
But that's another problem I have is that people are saying, well, what should I do about Bitcoin on social media? Well,
That's where you find all the answers. Just keep looking.
that's a losing proposition.
If you look hard enough, eventually you'll find the answer you want.
Because you know what I didn't see? Anybody saying, hey, lost my shirt on this.
No.
I invested in it 4 months ago, and I'm really regretting that decision. It's very one-sided.
Well, if you're walking into a casino, do you ask the people who are walking out where you should go put your money?
Where are the losing tables in this place?
Yeah. Where'd you
Yeah.
win today? I don't know. We should try it next time.
I've only been to a casino once, and I did not gamble a single dollar. I couldn't find where to go to even get money to gamble. I just walked around. It was fascinating.
There you go.
I was fascinated at it.
It's an experience.
Walked around, drank some diet sodas, Diet Cokes, and thought, this is fascinating to me.
There you go. Couldn't even find how to get the money.
No, it's probably a good thing.
I would think so, because you probably wouldn't have come home with it.
Probably not.
Yep.
So anyway, I think what the thing to be learned here is pay attention to potential red flags. And it's a very reasonable question to ask a financial advisor ask a bank, ask anyone. Anytime you're considering investing money, what are the restrictions about getting my money back?
And again, if it sounds too good to be true, 17% on a weekly basis of interest for depositing your cryptocurrency, just ask yourself, does this sound too good to be true? And if it does, chances are it is. Because now Celsius mentioned that they're just exercising a clause that was in the contract.
You agreed to this.
That you agreed to this, and we can do this as long as we use it to stabilize our operations. That means their operations are not stable right now.
Incredibly unstable.
And if you wanted to access your money, sorry, you agreed to it.
Ask the questions. It's worth knowing, and it's worth understanding. If I put my money into this investment, how available is it to me if I need it? Under what scenarios would my access be limited?
And you can, when all else fails, just ask those questions to Twitter.
And they'll tell you, and you know it'll be right. Because
right.
if it's on the internet, it's got to be true.
Yep.
Disclaimer, that was a joke.
Thank you. Thank you
right.
for that.
Off the soapbox, back to work for us. Thanks for listening and being with us. We'll return next week with another episode of Wade into Wealth.